current technology, no Gen AI, already allows us to provide a very good service model for basic banking, for holding an account, for doing payments. And it can also do it very cost effectively. So where is the challenge that is implicit in your question? Well, some of the people that may have heard me speak in such forums may recall that I like talking about Kyrianis, Mr. Yannis, the traditional banker. He is the banker that knows all his clients and their families by name. He has intimate knowledge of their finances, but he also understands their business aspirations, their fears, their dreams, and he works with them to help them achieve them. We trust Kyrianis with our money, but also with our privacy. The problem is that we cannot afford to offer the services of Kyrianis to our whole customer base. It is as complex to serve well lower value segments as it is to serve the higher value segments, but it's the higher value segments that can afford and produce the revenues that cover the costs of such a service. And at the same time, we have an emerging segment of customers, mostly young, that are digitally savvy, but one could say financially illiterate. They are the ones that need the services of Kyrianis more than anyone. The sooner they get into the discipline of managing their expenses so they can put some money on the side, the earlier they get to witness what we call the magic of compounding, right? Especially if this is combined with sound wealth management practices. But these customers are not interested in meeting Kyrianis. And we banks cannot afford to compete for these customers providing such expensive services. So can AI help us with this? It's very tempting to say yes. We can imagine a not too distant future where AI can track our transactions, predict our cash flows, propose that we put some money on the side and help us to manage it and invest it. So in effect, we are democratizing the banker, not just the teller, as we have done so far. But we need to be very, very careful. Trust is the essence of our business in the financial services. We cannot afford to have the kind of AI mishaps that technology pioneers have had, are having, and probably will have. We need to proceed with caution. We need to exercise the same oversight that we apply when we take credit decisions, when we give out loans. We probably need to go overboard when it comes to privacy and ethics. At Alpha Bank, we are embarking on a bank-wide initiative along those lines. So this includes defining our AI strategy, which means where do we want to apply AI and where not, introducing strong governance so that we define our lines but also respect the lines that are imposed by the regulator. We start initiatives, we invest in initiatives that are aligned with our strategy. We learn and repeat. Most of our initiatives, like Stratos mentioned, are internally facing, are assisting humans, but we hope that relatively soon our customers will also experience some of our more ambitious AI ideas. The final thing I want to say is that at Alpha Bank, we hold Kyrianis in a special place in our heart because our heritage comes from a real Kyrianis, Mr. Yannis Kostopoulos, and therefore our approach to AI, as well as our approach to banking, hopefully will always respect that. My references to Kyrianis before and the principle he represents hopefully reflects to all how much emphasis we put on frameworks and principles, especially in the financial services industry. We should, however, also recognize that the lawmakers are not standing still, right? We have the EU AI Act coming in, which is comprehensive and quite strict in some areas. It does list use cases of AI that are not allowed with very heavy penalties, and it also places a heavy burden on organizations that choose to implement what are deemed high-risk applications. Now, use cases in the financial service industries that involve customers, and especially that approach financial advice, are probably mostly in the high-risk category, and therefore they need to meet some very high standards, also based on the incoming regulation. So we need to have human oversight always. We need to have strict data management policies to make sure there isn't bias introduced by the data. We need to be transparent with the customers and notify them when we have to. We also need to make sure that there is AI literacy within the organization. And I would like to stand on this last point to make a point of my own that I think is easy to overlook. And this one is end-user AI literacy. And what do I mean by that? We definitely need frameworks, policies, regulations. They are necessary. So is trust. As I said, it's the basis of our industry. And trust can be misplaced. It can be misplaced on humans. It can also be misplaced on machines. And when this trust is misplaced, I have first-hand experience of how impotent some of the safeguards that we introduce are. And I have in particular in mind the victims of online financial fraud. Victims today become victims even though the systems of the bank detect the transaction and correctly classify it as high fraud risk. We call the clients and warn them about the risk. Sometimes we plead with them not to go on with the transaction. But if a client is under the spell of the fraudster, they will even get angry with us and insist on carrying on. Now, the good news is that as humans, we have evolved natural defenses to avoid misplacing our trust. And when we do that, when our defenses fail, we kind of correct and become more cautious. But do we have the same defenses for not misplacing our trust on a machine, on a piece of software? Of course, if we understand how the models behind all these things work, it helps, but we cannot expect this from customers. And I feel that what is missing is a responsible AI user guide for the layperson, one that works together with the safeguards that we introduce. I don't know what has to be in it, but I think it is something that we need to put some thought in.